Hey there, I'm Champion Trader Kevin Davey, and today I'm going to answer the question, what does TG, TBT mean in relation to this equity curve, and why is it important for trading? Let's get started. TG, TBT means too good to be true. And this is something I teach in my class, my Strategy Factory workshop, and I basically beat it into students' heads that they've got to watch out for the too good to be true syndrome with equity curves. This equity curve, I had a student send me and said, "Hey, I got this from testing a strategy, and I think it looks too good to be true." And I was clapping for him because that is a tremendous insight once you start to question the really good equity curves. And you might say, well, hey, it's got a lot of flat periods, but look at the upswings. There's a $130,000 upswing here in a short amount of time. There's another over 100,000. There's another one here. That means you're making a ton of money in a very short period of time. And chances are that's just not going to happen. It's too good to be true. So he probably did something, or there's a setting or whatever. But he questioned it. And kudos to him, because that means he's thinking like a trader. It's how I like traders to think, of questioning things that just look too good to be true. He sent me the code, and I put it into TradeStation, into a chart. This is heating oil, 1440 minute chart, which is basically a daily bar, and it goes back 16 years. And I got the same results as he did, and I had the same conclusion. It's too good to be true. There's something going on here. So I'm going to walk you through what I did to kind of debug this. Now, one thing you should realize, I'm using TradeStation, but pretty much no matter what software you use, whether it's TradeStation, NinjaTrader, MultiCharts, TradingView, you know, Excel, Python, whatever you use, whenever you see results that just make you think, oh my gosh, I'm going to be rich in a couple weeks, remember the TGTBT, too good to be true. You have to start digging and investigate it and try to prove what you found is incorrect. So here's what I did with this particular strategy. So over here on the left, you can see the individual trades. And I'm going to look right around here, which is around January of 2015. And that's right in this range, right around here. And so what I'm going to do is I'm just going to first zoom in and see what we can see. Right there. That's pretty much enough. You can see all the candlesticks, and although it's hard to see where the highs are, they're kind of covered up by this dashed line, look at all these trades in a row that all seem to exit at the same point. And there's a whole bunch of these trades. And so it's saying, for this one, for example, you buy here and you sold up here. Well, you couldn't have done that because the price never went up that high. And then the next day you bought here and you sold up here again, and so on. And it goes all through a number of trades. Now you might say, wow, that's pretty buggy. Well, it turns out there's issues with all software. All trading software has little quirks and things. And this one is taking advantage of something that TradeStation does, and it can be rectified with a single setting. So off screen, I just made a little fix to this strategy, and now you can see those trades that were these unrealistic profits go away, and now you see something a little bit more reasonable. One problem you have now is the equity curve doesn't look good at all. So it went from being this great equity curve to being a not so great equity curve. That happens. But at least you know that the too good to be true scenario was actually too good to be true. Okay, so you might say, well, okay, you knew what to do. You've been with TradeStation, doing TradeStation stuff for 20 years. Obviously, my students know what to do because I inform them of bugs and quirks and other things. What can you do if you're not a Strategy Factory student? Well, the first thing is do what I did and investigate the individual trades and just make sure they're looking correct. In this case, they didn't. So then you have to dig deeper. Why aren't those trades looking right? And what you can do is you could probably go to the TradeStation forums. You could probably ask people there or ask TradeStation staff. And that goes for regardless of whatever software platform you use. You can probably ask them for help. They should be able to provide it. And the other thing is that's just something you get with experience of back testing. You eventually figure out some of these weird cases where strange things sometimes happen, and you'll figure out how to avoid them. But the key isn't necessarily what this particular issue was or how it was resolved, other than to say, hey, I knew how to resolve it, and I teach my students how to resolve it too. That isn't the huge issue here. The huge issue, I think, or the big issue is you've got to really understand what your strategy is telling you, and when it says things are too good to be true, you've got to question it. Don't take answers for granted and just assume, well, hey, that's what the software said, so it's got to be right. No, you've got to question it, and it might be right. I might have investigated that strategy and found everything was good with it, but then at least I'd know and I'd have more confidence in it. And as it turned out, the strategy wasn't that good because of this issue. Hope that makes sense. But the too good to be true syndrome is something you should always be looking for when you're algo testing. Great systems, yeah, they can happen, but usually when something looks too good to be true, it usually is. I'm Champion Trader Kevin Davey. Thanks for watching.